We warmly welcome you all to our podcast series, the ONTOPIC'22, organized by the Commerce Society of Royal College, where we have an interesting talk on a trending topic in the field of business and economy. Today in our episode, we'll be diving deeper into the depths of some key aspects of the stock market, which is a global trending topic in the present world. Our guest is a diploma holder in marketing, Masters of Business Administration in Cardiff University, UK, associated member of Chartered Institute of Marketing, a certified and registered investment advisor in the Colombo Stock Exchange.
He has 18 years experience in investment advisory, business development, and strategy implementation. He has operated in the capacity of providing advisory services to reputed government and corporate funds. He is currently employed in a leading fund management organization. He is also the director of Skyreach Ventures Private Limited, Skyreach Investments Private Limited, Mastermind Holdings Private Limited, and Entrepreneurs Lanka Limited. He is the founder of Mastermind Institute of Studies 2004 and close to 2 decades of experience in lecturing, teaching, and coaching. His passion is to educate people on financial market and entrepreneurship and sharing his knowledge and practical experience.
I would like to warmly welcome Mr. Roshan Fernando to our podcast series. And thank you very much, sir, for taking time out of your very busy schedule calendar today to join us. I'm Adam Vilshan hosting this episode along with my colleague Kalya Mathananda. So moving on to the first question of today, how do you define the stock market in your world?
Yes, Adam. Before I answer the question, I would say normally stock market is defined as a place where all the public limited companies are traded their shares. So any public limited company can buy and sell their shares, and this is listed. And any person above 18 can go and buy shares and sell shares. Then, when you're looking from my point of view, I see this as an opportunity to grow your wealth. Now, for example, if we see Warren Buffett, one of the billionaires in the world who made money from the stock market, we saw at the age of 16, he learned about the stock market and value investing, and now he's one of the billionaires. So when we look at the stock market investing, I see this as an opportunity to grow your wealth, or in other words, change the dimension of your life to something extraordinary. So that is where I look at how the opportunity in stock market. In addition, we can say opportunity from a stock market gives an opportunity from, say, you start a business in a small space, maybe like sole trader kind of thing, one owner business, and then gradually you develop a partnership, then you go to private limited, and if you want to expand your business, you can go to the public and raise funds and expand your business. So that is another opportunity that I see in the stock market.
Thank you very much for that detailed explanation, sir. Our next question, what is a stock and why do companies issue stocks?
Yes, Karan. Now, stock is kind of an ownership, right? So when we buy a share or a stock we call in the stock market, you become an owner of the company. So there are voting shares and non-voting shares. So when we become a shareholder of a voting share, you get voting rights. So you become actually an owner. For example, if you take XYZ Limited company, we buy shares, we become a owner of the company. Then we can also vote against or in favor of the management decisions that they make. Now, why do companies issue shares? Is to raise capital, right? So we have one way of raising capital we call initial public offering, where initially a company decides from private limited to issue shares to general public. So we call that going public, right? So they will issue a document called prospectus. So IPO is initial public offering. So you will get a document called in physical form, you can get a booklet, or now online you get like PDF forms. You can refer the prospects. The investors can refer the prospects and make their investment decisions when you are looking. So to answer the question on why do companies go public, one is to raise capital, and the second one that we see is for more recognition. So when you go public limited, your financial statements also has to be periodically released at the correct time. So if it's 31st March financial year, within about 1 to 2 months, you have to release the statements. And the statements is also reflected in the website called csc.lk. So when you go to www.csc.lk, if a local investor, Sri Lankan investor, Colombo Stock Exchange website will have all this data. So if you look at a company was listed about 20, 30 years ago, all those data is also in the stock exchange website. So when we look at the stock exchange website, Kalya, the main thing that we see there is you can historically see how was their balance sheet initially. I think being commerce students, you all must be learning about P&L, income statement and balance sheet. So we can see what kind of assets they had and how fast that they have grown. So the another reason that I would say why companies go public is to get more recognition, so that they will say, okay, these companies are listed in the Colombo Stock Exchange. Then you can get more orders, especially when you're going to foreign countries and raising capital or for business deals. That will be very useful. So that is another advantage that companies will decide to go public and have their company listed in the Colombo Stock Exchange.
So, sir, you told us that companies go into stocks to raise capital. So here's the question that the majority of us here are actually asking. How do you make money on stocks?
Yes, Adam, I think that is the most important question. Like anybody would want to know, how do you make money from the stock? Now, first of all, I would like to emphasize that people think that stock market is for the big boys, right? Who has like millions of money, right? Now, when I was 18, when I was also a president of Commerce Society in my school. Back then, when we were learning about the stock market and all this stuff, it was very new to us and very exciting for me as well, right? So when I first bought my share, I think when I was just after A levels, I think the stock was SLP, and how to make money was one exciting area that I also was very curious to know. Then when we analyzed, right, at that time when I was young, there was nobody to teach like this about stock market. So then my father told me, okay, you buy a stock at a particular price at 10 rupees, and if the share goes to about 15 rupees, right, we will get a profit. So that's what my father told me. But then knowingly or unknowingly, I fell into the stock market field from early ages, just after A levels, and then started to learn about stock market. And then we saw how to make money. So the main two ways of how to make money in investing in stock market, Adam, is from one is capital gain, right? We call it capital gain. So how does capital gain happens? We assume we buy 1,000 shares at 10 rupees, that will be 10,000 rupees, right?
Yeah.
So the share goes to 15, right? So then 1,000 shares into 15, that's 5. So get 5,000 profits. That is what we call capital gain. So anybody, even with 5,000 rupees, can starting to learn about investing. But when you go to maybe about 500,000, 1 million and above large amounts, your returns becomes much more greater. You start feeling, because for 10,000, when you get 15,000, a person puts 1 million. When they get 1.5 million, 5 lakhs profit. So there is a little bit of a more advantage when you look at a larger proportion of funds being invested in the stock market. You get a larger profit. So we call that capital gains. So the second one, how you can make money in the stock market, is dividends. Now I mentioned that, say a particular individual who is even 18 years old or 19 or 20 decides to buy a particular stock. Now, for example, if you look the banking stocks in Sri Lanka, HNB, Commercial, Sampath Bank, kind of banks have announced dividends. So they will, from their profits that they make, right, they will distribute the profits to their shareholders. So when they distribute these profits to the shareholders, it might be something around 10% or 20%. That can be calculated from a calculation we call dividend yield, right? So some companies pay good dividends, some companies does not pay dividends. So how can a company pay dividends is by having a profit. So from the profit that they get, they will distribute it to the shareholder. So those are the main two ways that you can make profit. To summarize that, I would say number one is capital gain, where you buy a share and the price increases, you get a profit. And the second one we call dividends income, where you invest in a stock which gives a good profit, and then you get a part of it as a dividend for you. So in a nutshell, if you see some question, another question can somebody ask is, should I invest only in dividend stocks? Right? There are companies which does not pay dividends, but they have given supernormal profits. That means their capital gains have been even 200%, 300% in the year of 2021. But investing in stock market always carries a risk of capital loss as well. Now, I mentioned about capital gain. The other way around. From 10 rupees, it goes to 15. It's a profit, we call capital gain. But if it comes down from 10 rupees, it comes to 8, we call that capital loss. So we have to analyze the risk before we invest.
That's very interesting, sir. Another question that a lot of us would have is, who are stockbrokers?
Yeah, so stockbroker, a lot of people think, okay, stockbrokers are like the some real estate brokers to that level, but I'm not putting any career down. So stockbrokers are, we call them raised. Generally, a stockbroker should get a license from the Colombo Stock Exchange, right? So that is governed by Securities Exchange Commission. They have to get that license. So there's a series of examinations that you have to pass, like financial models and value investing, lot of exams to be followed, and then you get a license, right? We call it a stockbroker license, or we call it investment advisor license. So these people are the only people that you can get advice from. Now, when we come to stockbrokers, you might also refer to a stockbroker, a human being, or stockbrokers can be organizations. So, Khalya, you are referring to organizations or individual?
In general, sir.
So, sorry, I put you on the spotlight. We talk about, say, stockbrokers, stockbroker companies. If you talk about stockbroker companies, these are listed by CSE and SEC to carry out stockbrokering activities. So what is stockbrokering activities? Where you can buy and sell shares, right? So now, for example, if Khalya or Adam decides to go and buy shares in the stock market, you have to go to a stockbrokering company. It's like this. Now, somebody will want, why should I go to stockbrokering company? A simple example is like this. Now, if you want to open a bank account, right, to deposit money, withdraw money, you have to go to a bank like that. The regulatory requirement is you cannot just go and buy, you will have to go to a stockbroker company. Then, so the stockbrokering company, they will give you a account. So that will not be a bank account. There will be a thing called CDS account, Central Depository Systems, CDS account. So if it's a particular person's age is above 18, you can open a CDS account. Then you get a CDS account number. Say, for example, say Mr. Pereira decides to go and open a CDS account. He will get you have to give your details, address, basic stuff. And now even from online, you can open your CDS account without any hassle. When you go to the app called CSE mobile app, you go to CSE, the app store, and download CSE mobile app. Within 5 minutes, you can open a CDS account easily. And you have to open it under a particular stockbroker company. Then when you open the stockbroker company, you can, after you register yourself, like a bank account, the account is open, you'll get a notification that the account is open. Then you can buy and sell shares. So this is how the stockbrokering firm's role happens. Then stockbroker is a person who will facilitate, who will buy and sell shares in the open market. So there's platforms that are being used. So you have to go through a stockbroker, or in other words, we call investment advisor, to buy or sell shares. Also, you can get advice from them to which share to buy, which share to sell. In addition, the stockbrokering firms, generally the good ones, will also release financial reports on what stocks are good to buy, good to sell, the country situation, where is the inflation heading, where the dollar will go, and all this stuff also is being issued by these stockbrokering companies.
Thank you, sir, for that extremely detailed introduction about stockbrokers. But the reason why we need stockbrokers itself is so that we can, increase the amount of money that we have. So even if I wanted to, get into stock market, I'll want to make sure I can get as much as money as possible. So why do you think that as an investor that I should invest into the stock market instead of other investment opportunities?
Yeah, now the main thing that we see is now in the stock market, when we invest, where you see is in a situation where especially the inflation, now currently when we are doing this discussion, the inflation is around 14%. So we have to get a return above the 14%. Now, if you look at overall organization is giving a return about 6%, you are losing your money. So you have to get above 6%. So when you go to stock market, generally returns are much more higher. So that is one reason that you should go into the stock market investing. And next one is growing your wealth. So growing your wealth, this can give you 100%, 500%, like large proportion if you select the correct stock.
Next question, I think, is something very important, something we should all know. How to invest in stock market, and what are the fundamentals we should know?
Yeah. So how do you invest in the stock market is a few steps that we have to follow. First one is when you invest in stock market, you have to be above 18. Then currently you can go to CSE.lk and get details about which stock brokering firms are there, which is close by, and all this kind of detail. The next one that has to be done is you can download the CSE mobile app and fill in those details, and you can open. Looking into investing is, I would say, about 5 ratios we can look into. So what are these 5 ratios? One is we call net assets per share. So you can look at particular fundamental ratio called net assets per share. So total assets divided by number of shares. So for example, if you say ABC Limited is having a net assets per share of 25 and is trading below net assets per share, is generally attractive to buy. So those are some way that you can look at when you are investing. Then second one is we can look at another ratio called earnings per share. How many earnings the company is making for one share. And next third one is we call PE ratio, right? So these things can be looked out even through searching through Google or YouTube, so on and so forth. So when you go to CSE mobile, CSE.lk, you will be able to find these financial statements. And then the third ratio, which I said PE ratio, is where the price divided by particular earnings per share. So what companies that you should invest to look at the fundamentals, we look at a thing called the market PE ratio. So the market PE is currently trading at 12.7. So any stock trading below 12.7, say ABC Limited, if you look at a lower PE ratio of about 6.2, which is below the market PE, those companies are good to collect, good to invest. Then the fourth one, we can look at the dividends per share, how much dividends the company pay, dividend yield we can call. So if it's something 10, 11, 12, it is attractive, so we can collect something like that, right? So high dividend yield companies are good to invest. So you can have a mix of basket of portfolio, maybe 5 stocks, one is a growth stock, one is a good dividend paying stock, so on and so forth. Now the fifth ratio I could say is price to book value ratio that we can use, where you take the price divided by the book value, right? So something in the market price to book value is about 1.7. So in a situation where it is attractive below 1.7, you can invest. So more details, I think you all can search these on even YouTube or on the social media, even to educate the public. I personally have a YouTube channel called Mastermind Roshan. If you just click on that, you can search how to calculate all these ratios in detail. So the very important thing is when you are investing in the stock market to know the fundamentals, right? What fundamentals of a company before investing. At least you must look at whether the company is making a profit or loss. Then you have to go into these assets and other ratios that I mentioned, and then go for the investment.
So you told us that the reason why fundamentals also exist is so they can make sure you know what company can invest into, and so you can make sure that look, this company gets a large amount of profit.
Yes.
But it's obvious that the stock market does have a certain level of risk to it because it is the stock market. So how are we able? So what are the safest sectors that we can invest into the stock market, and how do we exactly identify such sectors?
Yeah. So the sectors, we can use a thing called, when you go into a little bit more detail now, stock market always carries a risk. I will not say no, because as I mentioned before, there is you can get capital gain, you can get capital losses, right? So here what we see is when we get capital losses, sometimes people might try to sell their stock. So you will not make a loss until you sell. So when we look at the right company and invest, you have to wait till the prices goes up, right? So what sectors that you should invest is we call a sector PE analysis. So now when you look at the PE ratio, market PE ratio, we say 12.5. If a particular sector, say for a banking sector, is below the market PE of 12.5, so if the banking sector is around 7, then those sectors are good to invest. Now, in addition, I would like to make a specific comment that is very relative to the current economic condition of the country. You all almost knowing there is a dollar crisis that is happening, right? So you can look in the stock market how, if you are living in Sri Lanka and you want to live continuously without any problem, you can invest into dollarized asset companies. So in the Sri Lanka stock market, there are companies which are gone overseas and invested their businesses in dollarized assets. So the assets are in dollars. So when the rupee depreciates against the dollar, right, the dollar asset value will increase. So if the dollar asset value increase, we will see the asset value increasing in that particular company, and we will see the share price also could appreciate, which giving a good capital gain. So dollarized assets and also dollarized income earning companies. So there are companies which are earning in dollars. So when we convert into rupee wise and take, it becomes a bigger value. So what companies to look at is what is attractive and safer is below market PE and going into dollarized earning companies or dollarized asset-based companies.
Thank you, sir. I'm sure a lot of us would benefit from that answer. We come to our final question for you, sir. As a certified investor, as a certified investment advisor in the Colombo Stock Exchange, what is your message to the young, enthusiastic investors to become successful in investing?
It's a very good question, because currently we see a lot of youngsters have come into the stock market to invest, especially because of the online platforms that the stock exchange have got. You can do online trading, buy and sell, even through your phone, mobile app from your home, and also you can open accounts. A lot of youngsters are coming. So the message that I would like to give them is to first study these basic ratios that I mentioned today in this program, at least before you invest. Then you will know that you are investing in a proper, fundamentally strong company. We call that value investing. You're buying stocks which has value. Otherwise, if we closely open eyes and just say for the sake of somebody told to go and buy, it will be a problem where the opportunity of losing your money much more higher. Because when you buy a fundamentally strong stock, looking at those ratios, either dividend income or capital gain will happen. So you don't have to worry there. So the main message I want to give them is the youngsters, especially, to follow this fundamental of investing. And there's a good book that I can recommend who's written by Intelligent Investor by Benjamin Graham, who is the coach of Warren Buffett, called Intelligent Investor book. So if it's also available online and also in bookshops. So Intelligent Investor book is also carries a lot of weightage of value investing. This is how the one of the billionaires in the world who made money from the stock market, Warren Buffett, was coached by Benjamin Graham. So his learnings are in this book, and even Warren Buffett has endorsed this book. So this book also might carry a lot of weightage for these youngsters when they are investing. So in summary, the message is learn what are these ratios before investing, study about the company, and then try to read the book of Intelligent Investor and get more knowledge and watch more videos on this value investing and investing in stock market while you are investing and or before you are investing.
Thank you very much, sir. You've definitely given us an extremely informative session. Thank you very much for joining with us today. Your presence and wise words help to magnify our cause in the best way possible, making this project a huge success. We look forward to our next interaction soon. Wishing you all the best for your future endeavors. Thank you.
And I would also like to take this opportunity to thank the Commerce Society of Royal College for organizing something like this, which is very essential for the youngsters. I mean, I would like to say when I was young, when I was the president of Commerce Society, I didn't even have an idea of doing something like that. So I would like to congratulate all of you for organizing something like this and creating more awareness among your student population about stock market. And I would like to thank you for having me. And it was a great pleasure sharing my knowledge with you. Thank you very much.